talk about AI and automation everywhere these days, it's no surprise that it's popping up in the crypto world too.
Yeah, for sure.
And specifically, we're seeing it more and more on decentralized exchanges.
Right.
You know,
DEX,
DEX, yeah.
as they're called.
Exactly. So we're going to do a deep dive today into the world of DEX Robots.
Oh, very interesting.
These automated trading systems that are starting to,
Yeah,
really change things.
we're really making waves.
Making waves and raising questions.
Yeah.
And one statistic that really jumped out at me from the research was that over 70%
Oh, wow.
of trades on DEXs are now being handled by bots.
Really? 70%?
70%.
That's a huge number.
I mean, think about that. That's such a huge part of the market that's shifting towards automation.
Right.
So it really makes you wonder why this is happening so fast.
Yeah, it's definitely worth exploring. And I think to really understand the rise of these DEX robots, we need to understand the problems they're trying to solve.
Right.
With traditional trading systems. There are a lot of limitations.
Yeah.
You got high fees eating into your profits. You've got slow order execution.
Yeah.
You miss opportunities because of that. And there's a lack of transparency.
Right.
It's like you're going through a maze blindfolded.
It's true. It really does feel like the system is working against you sometimes.
Well, in a way, it is.
Yeah.
Because you've got all these intermediaries, the brokers and clearinghouses.
Right.
They're acting as gatekeepers.
Yeah.
They're adding all this complexity and cost.
Right.
And leaving traders with very little control.
Yeah, yeah.
And so what these DEX robots are trying to do is cut through all that.
Right.
By leveraging the decentralized nature of these crypto exchanges.
So it's about putting the power back in the hands of the traders.
Right.
Even if those traders happen to be, code.
Exactly. They're like these tireless machines, constantly analyzing market data.
Yeah.
Executing trades based on pre-programmed algorithms.
I mean, that's fascinating, but how do these algorithms actually think? Like, what's going on under the hood?
So there are three main elements.
Okay.
Real-time data analysis.
Okay.
Arbitrage.
Okay.
And liquidity monitoring.
Got it. Got it.
So they're constantly scanning all these different DEX.
Right.
Looking for price discrepancies and trading opportunities.
And that's what you call arbitrage, right?
Yeah, exactly.
I mean, arbitrage is nothing new. It's a strategy that's been around forever. But it seems like robots are really good at it. Why is that?
Well, could you imagine trying to manually monitor prices across tons of exchanges?
Yeah.
Just to find these tiny differences and try to profit from it?
No.
It's a near impossible task for a human.
Right.
But a DEX robot.
Yeah.
Child's play,
Yeah, I guess so.
They can process huge amounts of data in milliseconds.
Wow.
Identify and exploit these opportunities before a human trader could even blink.
That's crazy.
So it's really about speed and scale.
Yeah.
These robots are like financial ninjas.
Right.
Silently slicing through the market and capitalizing on those little inefficiencies.
Yeah, that's a really great analogy. I like that. That makes a lot of sense.
And this speed gives them a real advantage for profits and for mitigating risks.
Yeah, explain that a little bit.
So let's say there's a sudden price shift, right?
Right.
It might take a human trader minutes to react to that.
Okay.
But a DEX robot, milliseconds.
Oh, wow.
So you're minimizing that risk.
Right, right.
And they could even profit from that volatility.
Yeah, so it really just highlights the limitations we have as humans versus what these automated systems can do.
For sure.
And you also mentioned liquidity monitoring.
Yeah.
What role does that play in the strategy?
So liquidity is crucial for any trader.
Okay.
But especially for these high-speed robots.
Right.
They need to make sure there's enough activity on a particular DEX.
Got it.
To execute those trades quickly and at the desired price.
Okay.
So imagine trying to buy a rare comic book at a convention. If there's only one seller, you're going to have to pay a premium.
Right.
If there are multiple sellers, then you have more negotiating power.
Right.
You can get a better deal.
Right, right.
And that's what liquidity monitoring is doing for these robots.
Okay.
It's helping them find those comic book conventions with lots of sellers so they can get the best price.
Got it.
And avoid slippage.
And what is slippage?
So slippage is that difference between the price you think you're going to get and the price you actually get when the trade is executed.
Got it.
It's a big problem in markets where there isn't enough liquidity.
So there are savvy negotiators looking for the best deals?
Exactly. Constantly seeking out the best trading conditions.
Yeah, and our research actually pointed to a case study where a DEX robot outperformed human traders by 15%.
Oh, wow.
during a really volatile period. So
Yeah, that's significant.
clearly they're doing something right. What makes them so good at this?
Well, first of all, they don't have emotions.
Okay.
There's no fear, there's no greed
Right.
clouding their judgment.
Right.
It's pure data.
Okay.
They don't hesitate, they don't second guess themselves.
Yeah.
They just follow the program.
Got it.
And they also operate 24/7.
Oh, right. Always on.
Always on.
Always on.
They never sleep.
They don't need coffee breaks.
No coffee breaks.
So they're basically superhuman traders, right?
Yeah, in a way.
I mean,
But it's important to remember, they're still tools.
okay.
And like any tool, they can be used for good or bad.
That's a good point. It seems like there's a lot more to this, especially when it comes to,
Yeah.
the risks involved. But before we get into all that,
Sure.
I am curious about the different types of algorithms these robots use. Like,
Okay.
what's actually going on under the hood?
Well, two of the most common types are trend following and mean reversion.
Okay, so trend following is basically just what it sounds like, right?
Yeah, they follow the market trends, they
Yeah.
identify those upward or downward price movements,
Right.
and they execute trades based on that.
So they're riding the wave, they buy when the price is going up and sell when it's going down.
Exactly.
Okay, and what about mean reversion?
So mean reversion algorithms, they're based on the idea that prices will eventually return to their average.
Okay.
So they identify assets that are either way above or way below
Okay.
their historical average,
Right.
and they bet on a correction.
So they're looking for those moments when the market's overreacting, either too much enthusiasm or too much pessimism.
Exactly.
Okay, so it's not just speed and efficiency.
Right.
There's a strategy built into these algorithms.
Absolutely. These are based on really sophisticated mathematical models,
Wow.
statistical analysis.
So it's like having a whole team of analysts working
Yeah.
for you 24/7.
Pretty much.
But with all this algorithmic power, I mean,
Yeah.
there's got to be some risks, right?
No, for sure.
Nothing's perfect.
You're absolutely right.
So what are some of those risks? What could go wrong?
That's a great question. And it's a discussion we definitely need to have because while they offer this incredible potential,
Yeah.
there are definitely risks that need to be carefully considered.
Well, I think that's a perfect place to stop for today.
Okay.
So we'll save that conversation for part 2 of this deep dive because I think we've given our listener plenty to think about for now.
Yeah, we've given them a lot to digest.
We've given them a lot to digest.
And these foundational concepts are really crucial for anyone who wants to be a part of the future of crypto trading.
Right, they really are.
Yeah, so it's like we've given them a glimpse behind the curtain of how these robots work.
Yeah.
But now we got to talk about like the other side of the coin,
Yeah, the risks.
the potential downsides, because like
Yeah.
nothing's foolproof.
Right.
And these robots are no exception.
Right.
So let's get into that.
Yeah, what are some of the downsides?
What could go wrong?
What could go wrong?
Well, one of the biggest things is security. Because remember, we're talking about decentralized exchanges, right? Which are built on blockchain and smart contracts.
Yeah, and smart contracts.
Smart contracts are basically self-executing agreements written in code.
Right.
And like any code, they can have bugs.
Oh, yeah, for sure.
They can have exploits, vulnerabilities.
Right, so they're super efficient, but they're still reliant on the infrastructure underneath.
Exactly. And we've seen cases where those vulnerabilities
Yeah.
have led to big losses.
Right.
So for example, imagine a robot that's programmed to execute trades automatically
Okay.
based on certain price triggers.
Okay.
Now, if there's a bug in the smart contract that controls those triggers,
Oh, yeah.
the robot could make unintended trades,
Right.
and you could lose a lot of money.
So your robot's basically going rogue
Yeah, essentially.
and draining your funds, so how can people protect themselves
That's a great question.
from these kinds of things?
And it all comes down to doing your research, due diligence. Before you just trust any robot with your money,
Right.
got to look into the team
Yeah.
behind the project, their track record.
Okay.
What kind of security audits have they done
Got it.
on their smart contracts?
Right. So it's not just picking the robot with the highest returns.
No, it's about understanding the platform,
Yeah.
understanding the risks.
It's like with any other investment.
Exactly.
You got to do your research.
You got to do your homework.
Don't just trust the hype.
Right. Don't get caught up in the hype.
Yeah.
You got to dig deeper.
And then there's also, I mean,
And that brings us to transparency,
yeah, transparency.
which is a big one because the code behind these algorithms
Yeah.
can be super complex.
Yeah.
It's not easy for the average person to understand.
Yeah, like trusting your mechanic to fix your car
Right.
without knowing anything about engines.
Exactly.
Like, you just hope they're doing the right thing.
Yeah. And that's why open source development is so important.
Okay.
Because when the code is open source, anyone can look at it,
Yep.
audit it,
Right.
verify that it's working correctly.
Right. So it's like having a community of mechanics checking everything.
Yeah, a community of experts.
Yeah.
Looking over the code, making sure everything's running smoothly.
Right. So it's like checks and balances, but powered by the community.
Exactly.
Okay. But even with all these safeguards in place, there's still that issue of market volatility.
Oh, yeah.
Crypto is notorious for being volatile.
Yeah, that's true.
You know, those wild price swings.
Huge price swings, yeah.
So how do these robots even handle that?
That's a good point. Volatility is a constant in crypto.
Yeah.
And it's both an opportunity and a challenge.
Yeah. How so?
So on the one hand, they can capitalize on volatility
Right.
by exploiting those price swings, right?
Right.
Buying low, selling high.
Yeah.
But on the other hand,
Yeah.
if the market moves against their strategy,
Right.
they can amplify losses.
Oh, so it's a double-edged sword?
Yeah, it's high risk, high reward. You can multiply your gains,
But also your losses.
but also your losses, yeah.
Right, so that's where risk management comes in.
Exactly.
Even the best algorithms can't predict the future perfectly.
Right.
So you got to have safeguards to limit your losses.
So you can't just set it and forget it.
Right.
You got to have a strategy.
Okay.
Define your risk tolerance.
Got it.
Set stop-loss orders.
Right.
Diversify your portfolio.
Don't put all your eggs in one basket.
Exactly. Don't put all your eggs in one basket.
And I imagine this whole thing gets even more complicated.
Oh, for sure.
When you factor in the regulatory uncertainty around crypto.
Yeah, because governments are still trying to figure out
Yeah.
how to regulate this space.
Right.
And these robots add a whole other layer of complexity.
Yeah, it's like the Wild West out there.
It really is.
You know, these new technologies are just
Moving so fast.
popping up faster than the regulators can keep up.
Yeah, that's true.
So where do you see this regulatory landscape going?
Well, it's hard to say for sure because it's constantly evolving,
Yeah.
but I think we'll see a move towards more clarity,
Okay.
more regulation
Yeah.
in the next few years
Makes sense.
because governments are realizing they can't ignore crypto anymore,
Right.
and they're starting to develop frameworks
Okay.
for regulating it.
So it's about finding that balance.
Right.
then.
Exactly. Finding that balance.
Between fostering innovation,
Yeah.
but also protecting investors.
Right.
So it's important for people to stay informed,
Absolutely.
you know, keep up with these developments.
Yeah. Pay attention to what's happening.
Yeah, and understand how it might impact their trading.
Right.
Because it sounds like there is a lot of uncertainty on the horizon,
There is.
but also a lot of potential for positive change.
Yeah, I think so.
So it's like,
This is where the community needs to come together.
right.
You know, developers, traders, regulators, policymakers.
Yeah, everybody.
We all need to be talking to each other.
Yeah.
To shape the future of this industry.
Yeah, that makes a lot of sense.
So it's not just about the technology.
Right.
It's about the social and economic impact.
Yeah, the bigger picture.
Exactly.
It's about creating like a responsible and sustainable ecosystem.
Right, an ecosystem that works for everyone.
Yeah, that makes sense.
Yeah.
Well, this has really highlighted, you know, just how complex this world is.
Yeah.
You know, we've seen how these robots can be incredibly powerful tools.
Yeah.
You know, offering all that speed and efficiency and access to opportunities that we might not have otherwise.
Right.
But, you know, we've also seen that they come with their own risks and challenges.
Right. You have to be careful.
You got to be careful.
And do your due diligence.
Do your homework.
Yeah.
So it's a lot to take in, but I think it's really important for
Yeah.
anyone who wants to get into crypto.
Anyone who wants to participate in this market.
Yeah.
To really understand these dynamics,
Yeah.
knowledge is power.
Knowledge is power.
And in this rapidly evolving landscape,
Yeah, you got to stay informed.
staying informed is crucial.
Yeah, it's like we've given our listeners a map and a compass.
That's a great way to put it.
Right, to navigate this exciting, sometimes treacherous terrain.
Yeah.
But even with a map and a compass, you still need to know where you're going.
You need a destination,
Right.
a goal.
Yeah, so let's shift our focus to the bigger picture here.
Okay.
Like, how do you see these DEX robots fitting into the broader evolution of the financial markets?
That's a great question.
Like, where are we going with all this?
Yeah. And I think it's important to remember that this technology,
Mm-hmm.
it's still early.
Right.
We're just scratching the surface here
Yeah.
of what's possible.
But even at this early stage, we can see how they're starting to challenge traditional ideas about trading and finance.
For sure.
Like they're rewriting the rules.
In a way, yeah.
Yeah.
They're bringing new levels of efficiency,
Right.
transparency,
Accessibility.
accessibility,
Yeah.
to markets that used to be dominated by big institutions and professional traders.
Yeah. The big players.
Right.
And this trend is only going to grow.
Yeah, absolutely.
So we could be looking at a future where anyone
Yeah.
with an internet connection
Right.
can have access to these sophisticated trading tools.
Right. Tools that used to be...
That used to be only for Wall Street.
Exactly. And that democratization of finance.
Yeah.
That has the potential to be incredibly transformative.
Right. It could empower people.
It could.
Level the playing field, create new opportunities for people
Absolutely.
to build wealth.
Yeah.
I mean, it sounds really exciting.
It is.
But also a little bit uncertain.
Yeah, there's definitely some uncertainty.
Yeah. And I can't help but wonder,
Yeah.
what does this mean for the human traders?
Right.
Like, are they going to become obsolete?
Yeah. Are we all going to be replaced by robots?
Replaced by algorithms?
That's the big question, isn't it?
Yeah, it is. It's a little scary, honestly.
And it's understandable to feel some unease about automation.
Yeah.
But I think we have to remember that technology is a tool.
Right.
And it's up to us how we use it.
So it's not about robots versus humans.
No, it's about finding ways for both to coexist and thrive.
Yeah. Yeah. And I think you mentioned this earlier, this idea of the human trader becoming more of a strategist, overseeing their robot workforce. So what does that actually look like?
Well, I think it starts with recognizing that robots, for all their computational power, they still lack human intuition, human understanding.
Right.
They're great at processing data, finding patterns, but they're not so good at interpreting those patterns in the context of, the bigger picture.
Right.
Like market trends, economic events, geopolitics.
Right. So it's about connecting the dots.
Exactly. Seeing the bigger picture that the robots might miss.
Right. Because they're just focused on the data.
Right. They're very data-driven.
Yeah. So human traders can bring in their knowledge of history.
Yes.
Psychology.
Human behavior.
Human behavior.
Yeah.
And use that to anticipate things that the robots might not see coming.
Exactly.
Okay. So it's like a partnership, right?
Yeah, it's a collaboration.
Each bringing their own strengths.
Absolutely.
Okay, I like that.
And that partnership is going to be essential for navigating the future of finance.
Okay, that's a fascinating dynamic. But before we go any further, I think there's one more risk that we haven't really talked about.
Okay, what's that?
And that's the risk of over-reliance on automation.
Oh, yeah.
Because it's easy to get caught up in all the excitement, right?
It is.
And think that these robots can just handle everything.
Right, just set it and forget it.
Yeah, just sit back and watch the money roll in.
Yeah, but that's dangerous.
What are the dangers of becoming too dependent on these systems?
Well, you become complacent.
Right.
You don't really understand what's happening.
You get a false sense of security.
Right, a false sense of security.
Like everything's just going to work out fine.
Yeah, and remember, these are tools.
Right.
They need to be used responsibly.
Yeah.
With a clear understanding of their limitations.
So it's not about setting and forgetting.
No, it's about staying engaged.
Right.
Monitoring performance.
Understanding what they're doing.
Yeah, understanding the decisions they're making.
So you have to be ready to intervene if necessary.
Absolutely. Adjust your strategies.
Protect your investment.
Protect your investments, yeah.
So it's like having a self-driving car.
Right.
That can take you where you need to go.
Yeah.
But you still need to be ready to grab the wheel.
If something goes wrong.
Yeah, if something unexpected happens.
Exactly.
Right. Okay, so there's a lot more to unpack here.
There is.
When it comes to, responsible trading in this age of automation.
For sure.
But I think we've laid a really good foundation here.
I think so.
For our listeners.
Yeah.
We've explored the mechanics of how these robots work. Right.
The potential benefits, the risks.
The pros and cons.
The pros and cons.
Yeah.
The bigger picture implications for the future of finance.
Absolutely.
It's been a fascinating deep dive.
It has.
And I feel like I've learned a lot.
Me too.
I'm sure our listeners feel the same way.
I hope so.
But before we wrap up this part of the conversation, I want to leave our listeners with one final thought.
By all means.
To ponder, to think about.
Okay.
If, as we've discussed, the majority of trading in the future is going to be automated.
Right.
What does that mean for markets themselves?
That's a great question.
Will we see a shift from these human-driven markets?
Yeah.
With all the emotions.
And the irrationality.
The irrationality to these algorithm-driven markets.
Right. Cold, calculating efficiency.
Yeah.
That's a profound question.
Yeah, it is.
And I don't think anyone has the answer yet.
Right.
But it's something we need to be thinking about.
Yeah, it's a question that will shape the future of finance.
And it's a question that we'll continue to explore in part 3 of this deep dive.
Okay, I look forward to it.
Okay, so we've gone pretty deep into the world of DEX robots.
Yeah, we've really explored the nuts and bolts.
We've seen how they have the potential to like really revolutionize trading.
Right. The efficiency, it's incredible.
So we've also talked about the risks, right?
Absolutely. You can't ignore the risks.
So now I want to talk about what this means for,
Yeah, for the average person.
For the individual, for you listening right now.
Right. How does this impact them?
So remember that question we left off with in part 2?
About what happens to markets?
Yeah, when they're mostly driven by algorithms.
Yeah, it's a big question.
It's a big question.
It really makes you think.
It does.
About how things might change.
It kind of feels like those, sci-fi movies where the stock market is just this giant computer making trades 1,000,000 miles an hour.
Like a supercomputer taking over.
Yeah. Is that where we're headed?
Well, it's not as crazy as it sounds.
Right.
Because as these robots become more common, more sophisticated, we could see fewer price swings caused by, human emotions.
Okay, so the market becomes more efficient.
More efficient, yeah.
But also maybe less responsive to, news events, things that robots can't really understand.
Things that don't fit into their algorithms.
So more predictable.
In some ways, yeah.
But also maybe more vulnerable to, big shocks.
Yeah.
Like black swan events.
Things that the robots aren't programmed to handle.
Right, the unexpected.
So how do we adapt to that?
That's the key question.
Do we just become passive?
Yeah, do we just hand over our money and hope for the best?
Just trust the robots completely.
Or do we find ways to use our own intuition?
Right.
Our creativity, our understanding of the world.
To navigate this new landscape.
Exactly. It's almost a philosophical question.
Yeah, it's like, what does it even mean to be a trader in this future?
What does it mean to be human in a world of AI?
Yeah, it's deep. It is.
Okay, so we talked about the human trader becoming more of a strategist.
Right, the overseer.
Yeah, so let's dig into that a little bit more.
Okay.
What skills, what mindset do you need to succeed in this new world?
Well, first of all, I think it's about understanding the limitations of the technology.
Right, knowing what your robots are good at.
Right, and what they're not good at.
And where they might, make mistakes.
Yeah. Recognizing their weaknesses.
So not just blindly trusting them, but being a little bit skeptical.
Yeah, having a healthy dose of skepticism.
Right. So you need to understand how the technology works.
Yeah, the strategies they're using.
The risks involved.
Right. And you need to be monitoring their performance.
Yeah, so it's not just set it and forget it.
No, you got to stay engaged.
You got to be ready to jump in if something goes wrong.
Exactly.
So it's like you're the captain of a ship.
Okay, I like that.
You might have all these automated systems, right?
Right, for navigation and steering.
But you still need to be aware of the big picture.
The weather, the currents, other ships.
Yeah. And be ready to take control.
If you need to.
If you need to.
Yeah, so critical thinking is really important.
Problem solving.
Being able to adapt.
Adaptability.
Yeah, because things can change quickly.
Yeah, so we're moving away from that image of the trader as, the lone wolf.
Right, staring at screens all day.
Do a more collaborative role, a strategic role.
Yeah, working with the robots, not against them.
So what does that mean for someone who's listening right now?
Yeah, who's maybe feeling a little overwhelmed.
Where do they even begin?
Well, I think the first step is just to embrace the challenge.
Okay.
And understand that this is a journey.
Right. It's not like you just learn one thing and you're done.
No, it's constantly evolving.
Especially in the crypto world.
Especially in crypto.
Things are changing so fast.
So you need a growth mindset.
Oh, okay.
You need to be willing to learn and adapt.
Yeah, always be learning.
And there are so many resources out there.
Yeah, online courses.
Communities, forums.
Podcasts like this one.
Yeah, find people who are interested in the same things.
Yeah, surround yourself with people who are learning too.
Stay informed. Ask questions.
And don't be afraid to experiment.
Yeah, try things out.
But always be careful.
Always do your research.
Do your research.
Yeah.
And I think it's important to remember that this isn't just about making money.
No, it's bigger than that.
It's about understanding how the financial system is changing.
Right, and what that means for society.
Because the rise of automation in finance raises a lot of questions.
Yeah, about wealth inequality.
About the future of work.
About the ethics of AI.
It's complex.
It is.
And we need to have these conversations.
Yeah, we need to talk about these things.
So we're kind of on the edge of a new era.
Yeah, new frontier.
We need to be mindful of the risks, but also excited about the possibilities.
Exactly.
Well, I think we've really covered a lot of ground today.
Yeah, we've gone deep.
We've explored the mechanics of these robots.
How they work, what they can do.
The potential benefits and risks.
The challenges, the opportunity.
We've seen how they can make things more efficient.
Yeah, but also more complex.
And I think it's clear that automation is here to stay.
It is. There's no going back.
And it's going to fundamentally change how we think about trading and finance.
Absolutely.
So thank you for joining us on this journey.
Yeah. Thanks for listening.
We hope you learned something new.
And that you're inspired to keep learning.
Because the future is being written right now.
Yeah.
And it's up to all of us to shape it.
Responsibly, ethically.
So stay informed, stay engaged.
And keep exploring.
We'll see you next time for another deep dive into the world of emerging technologies.